But all right, after that, let's shift our focus a little bit and talk about some very interesting things that are happening with India. And it's a momentous shift at this point on how the global markets are looking at investing. Investors are flocking at fast growing alternatives now to Beijing, and India now emerging more and more as a good option to that, really. Our country's 4 trillion stock market is pulling in billions of dollars of domestic and foreign money, and remember, billions of dollars were pulled from China and now they are coming in to India. So what exactly is this growth story? We've broken this up in an explainer for you, and there are 2 parts to it. First, let's tell you how exactly is China's economy steadily deteriorating. Now, there is a collapse, we understand, in the Chinese property sector. This is crucial. Why? Because a lot of Chinese wealth is tied up in properties. An average Chinese, we are told, owns about 2 houses at least. China also, you must have heard, acquires land in return for a lot of development that they do abroad. The overall Chinese consumption is also slowing down. Now, generally in a scenario like this, the government would step in and announce a stimulus package, meaning that the government would provide funds to those troubled sectors. But the Chinese government is not doing that. For example, China's biggest property developer, Evergrande, went bankrupt, but Chinese government did not step in to help. आसान भाषा में बताते हैं इसका मतलब क्या है? मतलब लोगों का पैसा डूब गया, लेकिन सरकार ने हेल्प करने के लिए कोई स्टिमुलस पैकेज या कोई वेवर्स नहीं दिए. As a result, what's happening? Foreign investors who were investing heavily in China's growth story are now revisiting their position, and this is where India steps in, and funds are being now withdrawn from China, making its way to India. But then the next logical question is, why is India looking so attractive to investors? Well, government is spending heavily, the Indian government that is spending heavily on infrastructure, which basically means that there are more jobs, there are more production, and thus more consumption, basically growth. India's economy is also in good health, meaning its basic vitals like currency, inflation, production, etc. is all in good shape, and India is also said to have a very politically stable environment, meaning the government will be able to push through what the key policy and reforms are, and what's on track now, there won't be a sudden change to that, hopefully, with a stable political environment. Also, foreign investors are betting on India. For example, FIIs, or that's the foreign investors really, net brought around $20 billion worth of Indian stocks in 2023. Also, there is a very interesting index called the MSCI Emerging Markets Index. Now, this index tells you about the most promising emerging destinations to invest across the globe. India's ranking on this MSCI index is only number 2, next to China. Now, this will lead to further investments coming our way. So, overall, the India story is looking pretty positive. Now, I've told you the basics over here. So, what should you do? What should your approach be if you're investing in the stock market or trying to save money? How do you capitalize and make the most of this India story? Joining us now is my colleague from Moneycontrol, Santosh Nair. Good morning, Santo. How are you doing?
I'm doing good, Sonal. Thank you for having me on the show.
Thanks, thanks. So, Santo, I just want to understand from you first. We obviously had these sort of explainer, and I've told people what the shift is. I want to understand, when we are talking about the India growth story, what can people do? People, and we've seen the influx of retail investors in the stock market over the past couple of years. They are defining moves and becoming the movers and shakers in some way. So, how do you think, or what do you think should be the perspective now of these retail investors?
I think India as a story, given the strong growth in its economy, is looking good for the next few years. And as you also mentioned, the vitals, the economy's vitals, such as inflation, rupee, GDP growth, all these are also looking pretty strong at this moment, and which is why you've seen the stock market do so well over the last year, and we are still seeing very strong momentum if you were to look at the amount of money that is coming in through mutual funds. all this point to clearly a lot of positivity about India. Now, as for retail investors, yes, there are concerns about valuations, but then ideally retail investors should take a slightly longer term view, because the big money is always made when you are hanging there for the longer term. So, if you look at the kind of money that kind of returns that mutual funds have delivered, it's not come overnight.
Yeah.
People who have invested for the last 6, 8, 10 years, they have seen their money compound at about anywhere between 10 to 15% depending on which scheme you have been in. So, and those returns are clearly much higher than fixed deposits. So, the comparison for any retail investor should be how much am I getting, how much returns am I getting by putting money in fixed deposit, how much more can I make. So, that is the question they should be asking. Do not get carried away by stories of people doubling or trebling money. That may happen in the short term, but over the longer term, money compounds at, if you are able to grow your money at anywhere between 12 to 15% consistently over years, I think that is a very good return. That is how retail investors should approach it.
Yeah.
Stick to your systematic investment plans, stick to your mutual fund investments and watch your money grow.
Watch your money grow. But also overall, Santo, if you could tell us in terms of real estate, in terms of equity, in terms of mutual funds, fixed deposit, etc., what do you think will be the next real growth engine, or a place where you think people can really sort of go on to sort of make good investments?
If you were to look at the various sectors of the economy right now, almost all of them are doing pretty well. Even the ones which are supposedly not doing well, it is on a relative basis, and they were doing very, very well 2-3 years back, and probably they are not doing as well. Not to say that they are not growing. So, IT is a very simple example. Property right now is pretty hot. If you look at the newspaper headlines every day about big projects getting sold out very quickly. So, there is clearly there is a boom underway right now, but at the same time the best way to play it would be through mutual funds. If you are a retail investor, do not get carried away by the fact that you are reading a certain hot sector where everyone is rushing to put in money. I think the better way would be to play it through the mutual fund routes, because that will give you exposure to all the different sectors in such a way that you do not end up taking too much risk. Now, if you are if you got the stomach for risk, you like to play the high returns, high risk game. See, obviously the kind of returns that you will make will always depend on the amount of risk that you are willing to take.
Yeah.
Then probably you should go in for some of the sector funds, but otherwise the better way to play the growth story, I would say, is through the mutual fund, preferably through diversified funds.
Right. That's interesting. I missed out asking on gold, but perhaps what's happening in gold is a story that deserves its own sweet time in a separate discussion altogether. But thanks, Santo, so much for joining us with your perspective.